What if I told you that the most reliable, safe investment in the history of the modern world is currently a ticking time bomb? If you are over 30 and you've spent the last decade faithfully pouring money into an S&P 500 index fund, listen very carefully. The rules of the game have changed. In March 2026, the S&P 500 is no longer the boring, predictable wealth builder it used to be. It has morphed into a high-stakes concentration of risk trading at valuations unseen since the darkest days of the dot-com bubble. If you are blindly indexing right now at nearly 6,800 points, you are a passenger on a ship that is dangerously top-heavy. The world in 2026 is moving fast. The Magnificent Seven are no longer carrying the weight, and geopolitical tensions are causing massive swings. The AI premium is facing a reality check. Most people in their 30s are too busy to notice, assuming the market is fine. As your mentor, I am here to wake you up. Today, we tear apart the numbers, PE ratios, sentiment, and historical red flags. Let's start with the cold data of March 2026. Right now, the forward PE ratio of the S&P 500 is a staggering 21.2x. The 10-year average is 18.8x. We are trading significantly above the norm while interest rates are far higher than the easy money era. When you pay a PE of 21, you're betting 21 years of earnings to get your investment back. That is a massive bet on perpetual growth. But the PE ratio only tells half the story. Look at the Shiller CAPE ratio. As of March 8, 2026, it is hovering at nearly 39. Only one other time in 155 years was this extreme. The peak of the dot-com bubble in 1999. Even 1929 wasn't this stretched. Every time the Shiller PE crosses 30, a major crash follows. In 2026, we are at 40. This is a historical anomaly. You are over 30. You don't have 20 years to wait for the market to recover if we see a 40% haircut tomorrow. The bulls say this time is different because of AI earnings are projected to grow by 15%, but that's already priced in. When you trade at these multiples, you aren't pricing in perfection. You are pricing in a miracle. Any disappointment will be met with violence. In March 2026, we are walking on a tightrope over a canyon, and the wind is starting to pick up. If you are feeling a knot in your stomach, good, that instinct tells you the buy and forget strategy is no longer enough. At Evolutive Productive, we believe in being the architects of our own financial security. We want to be owners who understand the world. If you value this raw approach, subscribe now. Stay ahead of the curve and hit that notification bell. Tell me your strategy in the comments. Now let's look at the hidden rot. Market leadership is dangerously narrow. The generals are holding up the index, but the soldiers are retreating. The cap-weighted S&P 500 is propped up by a few names, while the equal-weighted index shows exhaustion. Smart money is already exiting. Look at the software wipeout. Since late 2025, cloud and SaaS companies have seen valuations cut in half due to AI agent fears. If the software part is cracking, how long can chipmakers and energy providers carry the weight? The index is a battleground of narratives. Sentiment hit extreme greed levels earlier this year, but in mid-March, that exuberance is being tested by geopolitical reality. The Iran-Israel conflict introduced risk no one expected. When tension meets overvalued stocks, a deleveraging event is the usual result. So, is the S&P 500 overvalued? Yes, but should you sell everything and hide? Absolutely not. That is not the evolutive way. The evolutive path is selective ownership. Don't buy the index just because it's there. Look for the value spreads. High-quality dividend stocks trade at 14x while the index sits at 21x. Investors are moving into companies that produce real free cash flow. Shift from growth at any cost to growth at a reasonable price. Ask yourself, which of these would I still own if the market dropped 20%? 2026 is the year where the passive indexing era faces its greatest test. We are now in the era of skill-based ownership. The S&P 500 is a mountain of expectations. Prepare for the possibility that the world is more complicated than a spreadsheet. Don't wait for the market crashes headline. The smart money is rotating into materials and utilities. They are building fortresses while others party. You are the CEO of your family's wealth. Act like it. Reevaluate your accounts. The 2026 market is unforgiving to those who follow the crowd. Be the person who buys the boring value when others chase the shiny hype. Your future self in 2036 is counting on your wisdom today. Watch my specific roadmap on the screen now to see how I'm rebalancing, stop indexing, and start evolving. This is Evolutive Productive. Evolve.